I'll call him after my Zoom.
All right, guys, we are back again with another video this Friday around lunchtime. And today's topic is going to be how we can buy a house with pretty much 100% financing. And today's we're going to have Dave from New American Funding explain how that program works. It's specific for his company only. I know it's a lot of down payment assistance stuff out there that's available, but we want to talk about yours specific, Dave. Welcome to the live.
Yeah, thanks, dude. Appreciate it. Thanks for having me.
And so, Dave, so I have some questions for you, Dave. And I know a lot of people out there, they have aspirations on buying a house this year. And one of the big things is, hey, what happens if I don't have, the down payment? And so, everybody's rumbling with a lot of down payment stuff in everybody's ear these days. And so your program came out, I want you to tell us a little bit about it today. So first of all, what is the program called and how can the average person be able to use it?
Yeah, so specifically like in Minnesota, the program's available nationwide, But in Minnesota, we've got some really great down payment assistance programs, but a lot of them preclude people that have credit scores below like a 650 or 660. And so what we did is we rolled out a program where we lowered the bar on credit score all the way down to a 580 credit score. And so at a 580 credit score, generally speaking, you've paid off most of the credit cards and you've been making payments on time for a while. And so that's going to open the doors to a lot of different people. But basically what we did is we lined it up with a government program where the down payment requirement's only 3.5%. And what we've got is assistance where we can help you out with the down payment and a closing cost assistance up to 5%, up to 4.5% actually. So we can help you cover that down payment plus up to 1% of your closing costs on top of that. And so it's just a great opportunity if we work with the realtor where you can go negotiate some additional seller pays to help get the closing costs covered. And even if you come up a little bit short, like you can't quite get it all rolled into the contract, we can add 1% towards closing costs on top of that.
So hold up. So let me just backtrack 1 second to make sure I'm hearing right. And so you saying that this program starts at a 580 credit score, right?
Yep, 580. And
so let's just be realistic, Dave. I mean, are you getting people through with a 580?
580 credit score, yep. So it's just a government loan. It's a traditional FHA loan where we can go to 55, 56 debt ratio so that it doesn't restrict like other debt, like other down payment assistance programs. And so basically it's there if we need it. So if we come up short where somebody says, hey, I have the income that it takes, I got the job that it takes, I met that minimum 580 credit score that it takes. The only thing that's holding me back is I need a little bit of help to get across the finish line on the down payment. We can help you up with that 3.5% down payment. And then even we got a little bit more juice where we can give you another 1% towards closing costs if you need it.
Got you. And so obviously we have, one of the bigger programs here in Minnesota is Minnesota Housing. And it's kind of I guess, somewhat of a rival for the one that you guys have. What's the difference between the Minnesota Housing?
So what I would say is like Minnesota Housing is going to be, if your credit score is like 650 and above, 660 and above, the big difference is I like Minnesota Housing because it's going to borrow us a little bit more money. And so typically that's going to give us between $14,000 and $18,000 to work with that we can apply towards down payment and closing costs. So that's going to be a little bit more money. The interest rate on the state program is probably going to be a little bit better. The difference in interest rate currently is a 6% on the state program. And this money is going to be at 6.25%. And then if your income is, on our program, there's no maximum income level. So the state's down payment assistance money starts requiring payments after you make about $80,000 or $85,000. This one isn't going to cap any of that income. And so you can make $200,000 or $300,000 or $400,000. It's still going to have that money available to you. But the second is going to have repayable funds. So you do have to pay the money back as you go on a 10-year loan. And so the state's program is a lot better. I shouldn't say a ton better. The state program would be our first choice. But for people where it just doesn't fit the box and they have a tough time getting the score above a 600 or 620, this is a great option. I would say that the state program is going to give you, if your income's below $80,000, $85,000, the payment is probably going to be about $150 less using the state program. But this gives you a nice alternative.
Right. And so, I mean, the state program obviously is there, but I feel like the program that you have, it feels like more people can fit in that box, because I think y'all guys, from what I'm hearing that you're saying, that y'all don't have no income limit. So, if you're making $200,000, like you're saying,
right,
you don't have, sit there and worry about, can you qualify because, you got one person making $200,000, where the state program will say, nope, you're making too much money.
Right. So basically, if you get into the state's program, they're going to get into more of your stuff. So they're going to have us analyze every single deposit that's going onto your bank statements. They're going to have us analyze all of your income. They're going to want us to see more of what you got. And on top of that, the state's going to require a minimum of $1,000 of your own money. On this program, you can use 100% of the program towards your down payment. And then if you get closing costs paid for by the seller, they can truly get into the house for none of their own cash.
So hold on, let's backtrack again. So I just want to make sure I'm hearing it correctly. So are you saying that they can basically buy this house with no money down?
with zero money down. So the state program, typically it's a minimum of $1,000 out of pocket, and we have a lot of people every year that get in with the minimum down. Most of the
Mhm.
people, it ends up being $2,000-3,000 out of pocket and something like that. On this particular program, you can literally get into the house with zero out of pocket,
Hmm.
and so that's not a bad deal,
No, so that's what I was mentioning to you before. Like,
right?
even though the state might be, a little bit more cheaper, but you also got a caveat that the state is going to require you to have a higher credit score,
Right.
and you know, and then it has the income limit cap. So for the people that's going to be watching, this would be, if you're working at a good job and the credit might be, not the best, you sitting at 600 or something like that, but you got the income. I mean, here's the solution to that problem.
Yeah, absolutely.
Um, and so, Dave, when you talk about like this program, what type of homes can you buy with this program?
There really aren't any restrictions on the home type. And so if you're looking for a single family house, you're looking for a condo, you're looking for a townhouse, it's going to cover most types of properties. And so versus the state, sometimes they can get a little more restrictive on their program, but both I would say kind of a push. Manufactured homes are okay and stuff like that. But in the Twin Cities metro area, there aren't going to be very many restrictions at all.
And so, when you say that, um, let's say if for those out there that have maybe bought a house a couple years ago or 5 years ago or whatever the case is, and they're looking to try to rebuy a house again, I know the state, maybe have some requirements when it comes down to when the last time you used it. So, is any requirements with this one?
So the state actually is pretty good with that. A true first-time home buyer with the state program is going to be within 3 years.
Right.
Uh, so you can purchase a home as a true first-time home buyer if you haven't owned a house in the last 3 years. If you have owned a house or have been on title of a property, they would require you to use what's called a step-up program. And so they're willing to help you out, but the down payment assistance money is also going to be repayable with a monthly payment. And then the interest rates, they're going to start bumping those interest rates up an eighth or a quarter of a percent. And so this would be more similar to the state step-up program for a second-time home buyer.
Right. So it is, I guess, so what you're saying is that they do consider, the last time you bought a house into effect. So,
Yeah, the
Dave,
state for sure.
no, I'm talking about for your program, Dave, are you saying that you can buy, let's say it's going to take you another 3 years to purchase a house. Is it the same requirements as the state where you can buy a house after 3 years and use it again?
No, as long as you don't own a house, so it's just if you need the money and you're trying to purchase a home, this money is going to be
Okay.
available for you.
Got you. Okay. That's what I was trying to get to.
So like if you sold a house and you've been renting for the last year, this would be a really good program for you to consider.
Nice. So what are some of the misconceptions that buyers have with this program? Like sometimes, we can get in our head with this stuff or compare it to like other down payment assistance. I mean, what would you say that, speaking to those folks?
Yeah, I think a lot of people just don't know about the program, and so that's where we're trying to just get the word out on the program. That so you do have to pay the money back, and it's not free money, and so I think it fits the box where people come in and say, "Hey, I'm saving up the money," and they just can't get over the hump, or they need to purchase now, like their lease is up now, and they need to purchase now. If instead of them turning around and purchasing in a year, we can turn around and make that transaction happen today. And so I don't know if people that have any opinions about the program. I just don't think people know that there's programs available with lower credit scores all the way down to a 580 where you can get into the house, and money that isn't going to stand in the way of you purchasing.
Right. Okay. So, Dave, I had a question for you. So, you got a lot of people uh, that's always talking about like some of the like state grants or city grants or stuff like that.
Yeah.
And so, one of the questions I have for you is, those programs that would allow you to be able to take advantage of those grants, but they do require you to jump up through a lot of hoops to get there.
Right.
How easy is this program for people to start and finish?
The program is no different than a traditional loan, but basically we
Mhm.
just add on a second. There's no extra qualification, no extra paperwork. You're not dealing with another lender. You're dealing directly with us. And then on top of that, if let's say that there's some additional city money, let's say Brooklyn Park, Brooklyn Center, Blaine, that's available on top of that, we can turn around and layer that with this program as well.
Okay. Um, and so let me see. I had some more questions here. And so, if somebody's listening to this, they probably want to know what's the start to finish on this thing? Like, what does it take to get started and going through the process? And, how long do you think it's going to take to finish?
Yeah, so it's going to be no different than any other loan with us. And so we have loans on this program where we can close in 2 or 3 weeks if we have to. Typical closing time on any transaction is usually 30 or 35 days. And so
Mhm.
it's not going to hold up the show. As long as you meet the requirements for a traditional loan, it's designed for people to just come up a little bit short on the down payment. We say, hey, you can turn around and wait till you save up the rest of the money or figure out the rest of the down payment, or we can proceed today and you have up to 3.5, 4.5% available to you. And we just put it on a second mortgage until you have the ability to pay it off on a 10-year loan.
So what I'm hearing is that you're saying that basically the process still stays the same. If they're coming in there, they're going to still need the same documentation. Because I know like sometimes with Minnesota Housing, it can get a little redundant because they may ask for the same information twice for
Right.
a borrower. And so for
So
you guys,
I would say the true difference is like if somebody's using the state program, we usually require that they come in and we're going through in detail what the state is looking for. And
mhm,
so one of the biggest things that messes people up on that program and the down payment assistance is the bank statements. The state literally is going to analyze every single deposit that you have all the way down to $1. And so any deposit that goes into your account, I have to ask you about it. Any transfer that goes into your account, I have to ask you about it. I have to get into your business. It's not that I want to, but what the state assumes is you've got additional side hustles or income that we have to worry about. And they're searching for that. And usually that's what opens up a can of worms in the underwriting process. So where a typical person would come in looking for Minnesota housing, what we'd say is the first thing we'd do is analyze the bank statement and say, hey, you've got 20 deposits coming from Zelle, Venmo, Cash App, transfers from your cousin, all that type of stuff. You have to pump the brakes and stop doing that for a month. And we need one clean bank statement before we can proceed. Versus on this program, the down payment, the minimum credit score is only a 580, but on top of that, we still look at the bank statement, but we're only scrutinizing deposits that are under 1% or that are over 1%. And so if they're buying a $300,000 house and they've got those discretionary deposits that are $200, $500, 1,000, 15, all the way up to $3,000, we don't have to analyze those and scrutinize them as hard on this program.
hmm. So it makes it. I mean, even though Minnesota housing might be slightly better, but this one is slightly more loose when it comes to regulations.
For sure. Qualifying is super, super easy. And then the other thing is like on a Minnesota housing, if somebody's making, let's say they're making 60,000 on Minnesota housing, they might qualify for a $280,000 house. On this program, they're likely to qualify for $40,000 to $50,000 more because there's no restrictions on the debt ratio. Minnesota is going to give you a subsidized program, but they're going to want us to be much more conservative on the approval amount. And so sometimes we turn around, it's the difference between qualifying for a 4-bedroom house, 4-bed, 2-bath house versus qualifying for a 3-bed, 1-bath house. And so sometimes you need that second bathroom. Sometimes you need that 4th bedroom. Sometimes you need that second car garage. And it's the difference between you being happy with the house and not being happy with the house.
That's a huge difference. Huge,
Yeah,
huge,
for sure.
huge. And so, what steps do people have to apply?
Yeah, I mean, they just start out with a quick application. And then what we want to do is we always want to huddle up with the realtor to make sure that we're setting up a game plan that works for everybody. So anytime that we're using the down payment assistance program, anytime that we have somebody that's a sub, maybe 650, 660 credit score, we want to loop in the realtor. Because when you're using down payment assistance, the realtor's got to be involved and they got to know what's important. And most of the time that we're asking for closing costs, What can't happen is we write a pre-approval for 300,000. Monday morning, a purchase agreement comes in for 320, and we needed closing costs wrapped into the transaction. We get no closing costs. It's above the pre-approval amount, and we don't have a clean bank statement or things like that. So it's important to have the realtor involved, that they know 100% up what's going on with the transaction. They need to know if we need seller pays. They need to know the maximum payment. They need to know how fast we can close, and all those things are important. And instead of us doing the appointment with just the borrower and us playing a game of phone tag with the realtors, and we need you there having that conversation with them. And that's what's been really good with you, is you usually come in with the customer and we're in the know. And so everybody knows exactly what the deal is and what's important to get the ball across the finish line.
Right. And so Dave, so ideally, for those that's listening, who you think would be a great fit for this program?
I think the best people, and so my wheelhouse has always been the lower credit score. And so the people that are going to be the best people to qualify for this program are going to be people with lower credit scores. People even in the mid 500s is where I like to catch them, where it's, hey, maybe you just got to pay off a couple of credit cards, or we just got to clean up your credit. Our team will do some free credit repair for you. But maybe you're there, but not quite there, where I can clean you up for about a month. That's still going to be the best candidate for the loan, where I know that I'm not going to get them to a 650, 660 credit score for the down payment assistance from the state, but I'm going to get them to a 580 to 610 or 620 credit score, where it's just going to be just good enough to get them into the house, where we got nice debt ratios, we got a good job, the credit's just good enough to get there. But maybe where I see this being is somebody that needs to use their cash they've been saving for the house to maybe pay off $3,000, $4,000, $5,000 of credit cards to get their score from a 560 up to a 600, 610 or something like that. I see that being a really, really good fit for the program.
Yeah, no, and I think that, when you said that, it kind of, make you think, because a lot of times people think you need to have like 20% down or 10% down, 5% down. But, for those that's listening, if you have debt, maybe we can come up with a game plan as to, structuring yourself a little bit better. And instead of putting the down payment down, we can use this 100% down program. And then it kind of makes more sense for you, because now we just moving things around and make it make more sense.
Yeah. The big thing is, if you've got a good job, your credit shouldn't stand in the way. Now we've got down payment assistance that goes down to a 580. To get people from a 550 to a 580 isn't that hard. And so it's like, even those people that are below that 580, we know how to get them up super, super fast. And then we used to say, if you can figure out a down payment, well, now we got down payment assistance all the way to a 580. So it's really, you just got a good job. So if you've got a decent job that supports the house that you want to purchase, we're going to find a way to get you into it.
And so Dave, we didn't talk about this, but this popped up in my mind. Like, let's say if somebody wants to get an investment property, let's say if they wanted to live in one of the units and, rent out the others, does this program work with that?
Yeah, I think that you doing a duplex or something like that's not going to be a problem on a program like this. And I think that we could actually go up to a 3 or 4 unit. On a government loan, it's tough to get to that 4 unit house. Minnesota Housing is going to cap you at a duplex. And so if it would have to be an occupied, so they'd have to live in the house. It wouldn't truly be an investment property. But if they wanted the house hack and have somebody pay for the other half of the duplex, for sure, they could do something like that.
Okay, so for all of those that's listening, you can definitely get this program and have a down payment and get yourself an investment property and kind of offset some of the income. And so, Dave, when you talk about that investment, just so we can have clarity, you can basically use 70 or 75% of the rental income as income too?
Right. And so basically, let's say that one half of the unit would rent for, say, $2,000. Let's say it was a duplex, a bigger duplex or something like that, a 3-bed, 2-bath, or a 3-bed, 1-bath side-by-side duplex, something like that, where the rents might be $1,800 or $2,000, that we'd be able to count $1,500 or 75% of the rent towards qualifying. And so what it usually does is, somebody that qualifies for a $300,000 house, it's going to bump that pre-approval up maybe as much as $60,000 to $75,000.
Oh, wow. So that's
Yep.
so for those that I think that'll be great for people that don't make easy to buy themselves. They don't really make a ton of money. They can still get themselves something because now you have a rental property that can offset some of the income.
Right. So what we'll do is we'll start out, we'll approve them for whatever the amount they get approved for. So if that's 200 or 250, and then we'll just add on what the projected rent would be at something in that price point, and then we just increase their pre-approval. It's typically ends up being 50 to 75,000, depending on their income.
Oh wow. And so let me see, Dave, do you have any more questions that you can think of or case scenarios for this program?
Yeah, so the biggest thing that people should be asking are there reasons that I shouldn't use the program? And there aren't. With your first home, it's just a matter of just find a way to get into it. Don't stress about the down payment. Don't stress about trying to make it perfect. Government loans have lower interest rates than conventional loans or any other type of loans. The government's super, super flexible on getting into the house. Now, we have this down payment assistance that can be layered with it. There aren't really any excuses. And so the reasons that you want to own a house, down payment assistance aside, are going to be that the house should be your best investment. Your equity position in a house doubles every 10 years. So if you buy a $250,000 house, in 10 years, you should have about $250,000 equity. If you're sitting on the sidelines just renting, you're missing out on easy appreciation. Somebody's getting the appreciation. Somebody's getting rich off it. It's either you or it's the landlord. And I would just say, hey, 2026, as rates are going down, it should be everybody's year that they're looking to own their first place if they haven't owned yet.
And so, we all are, cheering for rates to drop. So I know everybody's, watching it close to the ear. Do you project that the rates will get down to the low fives this year?
Yeah, I think that we're already starting to see some of the rates into the fives. And so it's, but what I got to kind of warn is, we saw rates. I've been in the industry. This is my 20th year in the industry. I started where rates were at 6.375. And for the first 15 years I was in the industry, they went all the way straight down to 2.25%. That's where they kind of bottomed out. And then they went straight to almost to 8%. And then they've dropped from 8 to 7 to 6, kind of where we're at now in that range. We can, as rates have come back down, more and more people are coming back to the market. And so the last 8 months in the industry had been some of the busiest that we've seen in the last 4 or 5 months, or the last 4 or 5 years. And so we're seeing that the applications pick up every single week. Every time that the news is reporting mortgage rates hit another 3 or 4 year low, more and more people are coming to the office. And so what I would say is, if you're thinking about it, you've been thinking about it for the last couple of years, you're struggling with affordability, that you should have a conversation now. What you don't want to do is wait for home prices to go up $50,000, because I believe as rates continue to go down, there's going to be more people that come back, and it's going to get more competitive, and it's ultimately going to start driving prices of homes back up.
Right. So, we always get the I'm gonna wait for rates to drop questions, and it's a double-edged sword because, if the rates get too low, then, we're back to putting, $20,000, $30,000, $40,000 over list price. And so while we are not quite there yet, it's a great opportunity to take advantage of.
And we've seen that, right? We've seen that where rates went down too quick, and all of a sudden it was like every house had 20 to 40 offers. And we've seen that environment. And so I think it's okay if rates are drifting down and stuff like that. But we're starting to see multiple, I'd say the last 4 to 6 weeks, we're starting to see multiple offers again. We are, right?
Well, I would say it is also seasonal too, because we're going into the bandwidth of our busiest time of the whole year, which is springtime. Yeah. So obviously, if you are in the situation where your lease is coming due and all that stuff, we need to have these conversations now. Don't wait till the lease is at the end and you're saying, hey, I got to get out of the house and find a house in the next 30 days. That's not going to work. You got to have a little bit of time, especially if, we got to do some work on your credit score. We got to figure out how we're going to get the down payment and all these things. So,
right. So the pre-approval costs them nothing, right? So,
right.
All we're trying to do, the part that's tough for me is people will they'll find the perfect house on a Sunday afternoon and they'll go, offers are due in 3 hours. And it's like, well, dude, Like, what do you want me to do? And it's like, then we do the best we can, and you're a 580 score. You know, dude, if I would have got to you 2 months ago or 3 months ago, I could have cleaned this up. I could have had the down payment assistance lined up. And this is the easiest thing alive, but it's just not going to happen in the next 2-3 hours. And we do the best we can. But, you know, generally speaking, a pre-approval, you know, the first time we come in, like last night, the group that came in, it was, you know, we're just talking through a game plan. We know your income doesn't work. We know that you're working towards it, but helping you come up with, generally speaking, a game plan that it's going to take for you to come up with over the next 6 months. We have those conversations. And then we have people that come in and say, I want to buy a house this year. And then we have people that say, hey, my lease is up in 2 months. And then we have people that say, hey, I broke up with my girl. I'm sleeping in my car. Like, I need to find something now. And we can accommodate all of those, but the pre-approval is good for 120 days. And after 120 days, it doesn't mean that you're denied. It just means that we got to start refreshing and updating credit. We got to update some pay stubs and some things like that. But generally speaking, what we want to do is we want to do a soft credit pull, just kind of see where you're at. We want to talk through your income. We don't have to, you know, if you're casually thinking about purchasing in the next year or two, you know, we should do a soft credit pull. We should be talking through debt ratios and say, hey, this is kind of where I see it playing out, and coming up, planting seeds and coming up with a game plan. And then if you're imminent, like you think you might make an offer in the next 3-4 months, then we should probably firm that up, and we should get documents in the file, pay stubs, W-2s, and we should get an underwriter involved to make sure that your pre-approval is rock solid.
Right. And I think that, you know, for 2026, we have to get people to see things a little bit differently. Instead of them waiting for going to the open house and waiting for the highest and best deadline and wanting a miracle to happen, you know, let's have these conversations now. You know, we can talk this through. You know, we can give you a realistic expectation of what you can expect. And, you know, and if you have any bumps in the road or any credit challenges, you know, this is the time to talk about it, you know, because what tends to happen, Dave, is that we get them to the office and they say, oh, I got a 700 credit score. We find out it's 590 or 580, and they got something that's been sitting on there that they had no idea, you know, Comcast bill or something like that. They've been sitting there for the last couple of months dinging them down. So it's easier.
Or dude, vice versa, where they haven't been getting to us because they think their credit stinks and they haven't really used their credit for the last 10 years. And then we pull it up and we find out they got an 800 credit, or they just got no credit, right? And it's like, dude, this is the easiest thing alive. You're ready to go. And so information is free. Conversation is free. You know, if you're thinking about buying a house, and say, hey, let this be the year, come in, let's just have a conversation. It's, you know, it's one where sometimes we pull credit, sometimes we don't. But, you know, I closed, you know, last year, my team closed almost 40 loans with credit scores below a 580, and the lowest credit score was a 502. And so, you know, your credit score is not going to stand in the way. If you got a good job and we can figure out a down payment, we're going to be able to come up with a game plan for you to get the house.
Right. And so, Dave, some of the last questions is, you know, you know, they always want to come to us at the last second. We just addressed that. Obviously, coming to us is free. You know, you don't have to pay us anything. Dave, what do you say for those that's thinking like, oh, you know, you pulling my credit, you know, you're going to lower my credit score, you know, myth?
Yeah, a couple of things with that. And so there's been some recent law changes that have changed some things, but a mortgage inquiry it counts as a soft inquiry, but we also just pull, when we're starting to talk, we just pull a soft credit report. And so there's not even a ding on your credit. And then there's times where we have to pull the full report. A soft credit pull just means we're pulling 2 of the bureaus and we're making sure that it doesn't hit an inquiry. And so there's zero effect on your score at all. But most of the time that's the most appropriate, where we're just starting out. Hey, why don't we just take a peek and see what's there? You know, show me what you're concerned about. Let's thumb out the debt ratios. I just want to calculate what your student loan payment has to be, your car payment, and seeing what credit cards that you got. And generally speaking, are there some collections that I have to worry about and factor in? And so what we're looking for is to help us calculate the debt ratios. How much do you make? You usually know how much you made in your W-2 last year and the year before that. We can kind of just average that, but we can talk through the rest of it. But pulling a soft credit report gives us a pretty realistic scenario, or we can set realistic expectations where this is going. And then if it looks like it works, a lot of people are like, yeah, dude, let's do it. Then it's like, okay, let's roll up our sleeves. And then here's the list of the documents. You want to email them into the office. You want to drop them off into the office, or we'll create a portal where you can upload them. And then we'll do that full credit report at that point. And then that's where we get the underwriter involved and get everything signed off on an actual pre-approval.
Right. And so like, and I just want to make sure that, I get things clear for those that's listening. So if you're sitting out there and you're one of these people we're talking about where you're thinking that, coming in is going to affect your credit score, or you think that I'm just going to wait until that time comes when I'm ready, like we're giving you every reason to come down. It's free. It doesn't cost you anything. If you having some credit troubles, I mean, even if it did ding your credit again, I mean, if you're already at a 500, it's not going to change very much.
Yeah, it's usually the people with the lowest credit scores that are the most worried about getting dinged on an inquiry. Like, even if it was a hard inquiry, it might affect your score by a point or something like that. But the government lets you have unlimited mortgage inquiries. It all counts the same. And so they don't want you, the government doesn't want to prevent you from shopping for a house. They know it's a big purchase. And so pulling your credit isn't that big a deal. And so, the biggest thing that I think people get anxiety about coming into the office and stuff like that. If you need down payment assistance and your credit score is lower, you should come into the office. And, number one, it shows that you're serious about coming up with a game plan, but you can sit and ask an unlimited amount of questions and get a crystal clear game plan on how to get this thing done. And a lot of people feel like they're wasting their time if they feel like they're not going to qualify. That's our job, right? We talk about home ownership, and, at some point we have people that sit and talk for 5, 6, 7 years, right? And it's like, that's our job, to talk you off the cliff and say, hey, but what we will keep pointing out to you is if you would have bought a house back when we first talked 6 or 8 years ago, you would have $200,000, $250,000 of equity by now. And so we keep telling people that owning a house is a great deal, for a number of reasons. The biggest one is owning something that you've got a piece of, the equity.
Okay. So Dave, let's recap as we conclude. We talked about the 100% down program. We talked about that, to get into that program, it's a 580 credit score minimum. It doesn't have any income caps. And so, the entry level to this program is pretty much the same as you just doing a traditional loan. And the time it takes is pretty much the same. Is no extended time because y'all guys are servicing this loan. So it's not like it's, we got to wait for another entity to come into the picture and then they have their own overlays. And so, anything else you want to add to that, Dave, as we conclude?
No, just don't let a down payment. The message walking out of it today is don't let your credit score stand in the way. Now, don't let the down payment stand in the way. If you've got a good job, you need to reach out. Let this be your year. There aren't any excuses starting in 2026. So it's down payment assistance is available if you need it. Your credit score is not that deep. We can work with you on the credit. If you've got a good job, 2026 is going to be a great year for you.
Perfect, Dave. I definitely appreciate the time, Dave.
Yep.
And for those that are listening, don't delay. Obviously we want to help as many families as we possibly can, but this is helping you get to the next level, and that's my job. So with that being said, Dave, I definitely appreciate it.
Yep. Appreciate you too, bud.
Yep. Take it easy.
Yep. Bye.